Good morning. Today is April 3rd, Wednesday. I'm Joe Terril, President of Terril and Company, private wealth managers in St. Louis, Missouri. Joining me this morning is Russ Phillips, one of our senior investment officers. We're here with an update on not only how the first quarter of the year ended, but also what our outlook is now for the balance of the year. Russ, it was a very good quarter, as it seems like the market is coming our direction with this idea of interest rates are going to stay higher for longer. I looked at most fixed income bond funds. They've returned nothing this year. Our strategy of staying very short, making 5.5%, is paying off for us. You know that's going to continue to be our thoughts. The economy, as strong as it is, what's the market expecting now, particularly in this fixed income area?
Yeah, I think, if you would have asked me that a week or 10 days ago, you could say 3 rate cuts. And I think if you want to know where consensus is, consensus wants rate cuts. And so we've been saying all along, and I think right, and you're even hearing this from some of the Fed governors, right? Bostic now talking about 1 rate cut. So the market does seem to be coming our way. We always have differentiated ourselves, especially in the fixed income area, focusing on individual and currently shorter term maturities on the bond side, staying away from bond funds where you can actually lose principal. So the market's been coming our way in terms of the rate thesis. We've been correct. You've been saying all along the economy's strong. It continues to be strong. We'll see with the jobs numbers on Friday if that continues. There's some saying the jobs numbers are going to be much higher, others saying more in line. So we'll see what Friday brings.
Yeah, the thesis about the economy being strong today, this morning, it was Institute of Supply Management figures. It wasn't as strong as what some people thought, but nonetheless, the index shows it's still growing and prices are still strong. What we believe here at Terril and Company is the problem of inflation isn't solved. The economy is still doing excellent. Employment is strong. There's no need for the Fed to cut interest rates. Why do they want to cut interest rates and take a chance of reigniting inflation, particularly when commodity prices are beginning to go back up? We see what's happened with oil, we see what's happening with gold, we see what's happening with other industrial metals, etc. That certainly isn't the type of environment for a Fed to jump in and say, well, we need to cut interest rates. So we continue to believe the economy will be strong. Now, the first quarter of the year, stocks in general had a good quarter. Bonds did not. So far, stocks are off to a rough start in this second quarter. Maybe talk a little bit about why we think that stocks between now and the end of the year will be underperformers, and this thesis of all of 2022, 2023, and probably by the end of 2024, stocks are going to show no gain.
Yeah, I mean, we've discussed this on prior videos that if you go back to January of 2022, returns on even the best performing ETFs like a triple Q have been around 11-12% on a price basis. We continue to think the market's going to remain flat. There are opportunities which we're taking advantage of, like you mentioned, in the gold area, in the energy area, in the industrial area. But overall, staying away from some of these more higher price names, the Magnificent 7 or 5 or however many names like Tesla and Apple and Google, we've been right lately on that call. we think the opportunities will be in the other 490 stocks, continuing to be in energy, commodities, gold, and that's where we're looking for value. We think the market's value right now on a risk-reward basis, a lot more risk, little bit less reward.
Yeah, our AT&T and Verizon is an example, paying 6% dividend yields have quietly appreciated another 15-20% in value. Citigroup has had a very nice rally that no one wanted. And you mentioned the energy stocks. They've had very nice rallies, particularly some of the MLPs that are paying nice dividends. So in general, isn't our message out there that these are the stocks that will continue to do well between now and the end of the year?
Right. We're going to continue to look for value like we have for clients, and we're going to find those opportunities, and that's where we're going to focus our time and energy.
We appreciate your viewing, and we will be back. Brian Curtis, our producer here that helps us with this. Thank you, Brian. If we all survive April 15th, we'll be back maybe shortly after that with an update on our thoughts. Thank you.
Thank you.